What's up, everybody? Another day, another dollar. Today is Monday, kicking off another week here in financial markets. Before we get started, just want to remind you all to go check out yesterday's Another Week, Another Dollar market outlook video for all the big risk events scheduled for this week. If you haven't done so already, be sure to check that out after you finish watching today's video, of course. In the meantime, these are the top 5 things to know today in financial markets. Kicking things off with number 1, let's get started with the price action in crude oil markets. Now pay attention because a couple of these stats will sound ridiculous. Front month WTI oil prices are down around 26% at the moment, trading at $13.40, their lowest level since March 1999. The front month contract expires on Tuesday, and the June contract, which is becoming more actively traded, is also struggling as of this morning, down around 9% to trade at the $22 mark. The plunge in oil prices not only reflects the big drop in demand resulting from the coronavirus pandemic, but also concerns that storage capacity at the main storage facility in Cushing, Oklahoma is starting to fill to full capacity. So obviously be sure to keep your eye on many names in the oil and gas sector. Probably will be a lot of red in that industry. On to number 2, coronavirus-related developments will also be in focus this week. While cases are still on the rise, markets are starting to look past that and instead are focusing on indications of just how soon the economy will reopen. While the U.S. It leads by far in the number of confirmed cases, with the total infections approaching more than 760,000 as of this morning and more than 40,000 deaths. We saw that last week several states reported that they plan to restart their economies as early as May 1st, but so far there have been no concrete timings. So if we do get some hints on that front as the session progresses, that could be a spark for risk appetite. So like I said, keep your eye on that. On to number 3, investors are also focusing on further headlines regarding fiscal stimulus after we got news that Republicans and Democrats are making progress on providing further liquidity to the $350 billion lending program known as the Paycheck Protection Program. Funds dried up there very quick last week. So obviously Republicans, Democrats, Trump, Trump, Pelosi, Mnuchin, all doing their part in providing liquidity and aid to small businesses. On to number 4. Taking all this into account, markets on Wall Street are set to start the week lower as we look ahead to a big week of earnings. Nearly 1/5 of the S&P 500 reports corporate results in the days ahead. Dow futures are pointing to a drop of more than 400 points as of the moment. Stocks are coming off a strong 2-week performance where the Dow logged its best a 2-week rally since 1938. So we're probably due for some downside volatility this week. So like I said, be sure obviously to brace for some volatility and position your portfolio accordingly. And finally, number 5, like I mentioned, a big week for earnings. IBM is set to kick things off when it reports results after today's closing bell. And we'll be focusing on 2 main things specifically: just how the coronavirus pandemic is affecting business operations and how new management plans to accelerate the company's turnaround plan. According to Investing.com's economic calendar, we're expecting a 20% year-over-year drop in EPS to $1.80, as well as a 3% drop in revenue to $17.62 billion. So keep your eyes on IBM after today's market close. That's it for me for today. May the trading gods be with you. Have a good day, everybody.